Hey everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be talking about Viatris, ticker symbol VTRS. Today we're going to be revisiting the stock analysis I did on April 20th on Viatris. In today's stock analysis, I'm going to give a very brief business description. We're going to go over dividend information, stock price history, price performance versus its peers. I'm going to revisit the multiple based valuation we went over last time, and then I'm going to finally give my thoughts and a price target for Viatris. Viatris is a relatively new company. It is a result of a spinoff of the UpJohn business from Pfizer merged with Mylan. Now, the reason why this was a good fit was both companies specialize in generics. They both have good name brands with expiring patents. So they're kind of in the same ship. It makes sense. It's a really good fit for the companies. And so it's very easy to manage, at least from a portfolio perspective. Moving on into dividend information. Right now, the dividend yield is 3.2% for VTRS. The annual dividend is 44 cents, and that puts the quarterly dividend at about 11 cents per share. Now, when the announcement of the 11 cents per share was taking place, it came at a time where it was not going to allow 4 distributions for the year, so you're only going to get 3 quarterly distributions instead of 4 for the year. That's not really a big deal. It's more about the 11 cents. It was a little bit of a disappointment. They thought that there was going to be a higher free cash flow, and thus there was going to be a higher dividend per share issued. So the dividend yield on an annual basis is definitely a little bit lower than analysts had it prior to IPO. Now, the expected annual dividend was going to be somewhere around 5% range, and when those cash flows were off, they did 25% of their free cash flows on a per share basis, and that came out to 11 cents. Definitely a disappointment right off the bat. Now, one of the reasons why you saw a big drop in the stock price was there was this huge disconnect between what analysts estimated when the merger was announced. They took kind of the balance sheets, they took the financials, they merged them together what they anticipated. That average sales, the analysts did at 18.4 billion. When VTRS came out with their guidance, that came in at about 7.2 to 7.8 billion in sales. Now, on the EBITDA side, it was also a disappointment. VTRS gave guidance of 6 to 6.4 billion in EBITDA, while the analyst had them at 7.2. Now, this isn't a huge difference either. It's about off by about 10 to 13%. Not huge deal. The one that has the biggest negative impact is the free cash flow, and the reason why is this impacts what they can provide and what they gave guidance on. They're going to give 25% of their free cash flow in payouts, aka the dividends. So they estimated and gave guidance at about 2 to 2.3. This was a 40% disconnect from what the analyst had estimated at 3.8 billion in free cash flow. Thanks so much for watching thus far. Please hit that like button. It helps me out a lot. Now back to your content. Now, since it's been 2 quarters, we do have some updated guidance from VTRS. Now, if we go to their first quarter results, you'll notice that they reaffirmed their financial guidance that they gave, and that's what I just spoke on. But in this last quarter, they updated and they provided some new guidance for the full year of 2021. They raised their total revenue guidance from 17.5 to 17.9. Now, this is updated from 17.2 to 17.8. Now, there wasn't a big discrepancy in revenue versus what the analyst had estimated. Going on to EBITDA, they raised this slightly, about 150 to $50 million. So not a big raise in guidance here on the EBITDA side. And then on the cash flow side, you have a range of 2.2 to 2.4. So it's about a range of 200 million higher to about 100 million higher than what they had estimated they gave guidance on initially. Now, this is still 35% off from what the analyst originally had them on their, I wouldn't say IPO, but when they merged and they began trading as a merged company as VTRS. Now, one of the things I saw in the Q1 results that was in direct conflict with the VTRS guidance was free cash flow came in at $799 million. Now, if you do some rough math, you annualize that, hits you to a free cash flow somewhere in the $3.2 billion range, kind of splitting the difference between VTRS's guidance of like 2.4 and the analyst at 3.8. So, I feel like that gets the stock, in more of a healthier spot for a dividend increase, right? But anyway, as we fast forward to Q2, they had free cash flow of 470 million. So a really big difference between roughly 800 million in free cash flow versus 470 million in free cash flow. If you annualize that 470, you're under $2 billion in free cash flow, even lower than the the annualized free cash flow estimates that VTRS gave. So I don't understand why their free cash flow is fluctuating so much, especially in more mature companies that are really making generic medicines. To me, it just doesn't make a lot of sense. All right, so next up, I want to do the performance of VTRS versus some of the industry indexes. So for the SPY, that's going to be S&P 500. IHE and XPH are going to be the purple and the gold line. Those are industry-specific indexes that are relative to VTRS. Now, if we look at this in the last year, we can see that VTRS has definitely underperformed all of them. Simply buying the S&P 500, we'd be up 33% in the last year, versus these industry indexes, you'd be only up a modest 7% or 14%. Still, typically, for most years, good gains, but if you compare it to the SPY, you're still losing a lot of money. And then if you look at VTRS, significantly down, 12% still in the last year. Hey, if you want to hit the like button right now would be a perfect time. If you don't, that's fine too. Now, back to your content. All right, next up, I want to revisit the value multiple that VTRS provided using their adjusted EBITDA. And they said, depending on where their EBITDA came in, they provided initial guidance in that 6 to 6.4 range. They just increased the guidance from 6.2 to 6.4. So, if we're going off of that, that thought, the same idea that they had of 6.2, 6.4, they see themselves valued around $18 to $19. Now, this was, 6 months back nearly, 5 months back nearly now. And if we kind of look at that hindsight, we've talked about it a little bit in the free cash flow section, but that's not, the lack of EBITDA is not the reason why their share price has become depressed. The reason why their share price went down. The reason why it went down is because there was this, honestly, it starts at the dividend. People saw the dividend not being what they expected. And the only reason why the dividend would go up is if free cash flow went up. VTRS has given guidance to say they'll pay out 25% of expected free cash flow. And if free cash flow is coming in at, in the $2 to $2.4 billion range, that's going to have that dividend substantially lower than what the analyst had, 40% lower. So that dividend's 40% lower, etc. And that's where the valuation really took a hit. That free cash flow is super important. You can do price to free cash flow for valuation models. You can do lots of free cash flow is super powerful. It's hard to mask that. And that's why you saw revenue and so you didn't see a big difference between analyst estimates and guidance for revenue. You didn't see a big difference between EBITDA and the analyst, but then their free cash flow, you saw this huge disconnect between the two. 3%, 10%, and then boom, 40% difference, and that's huge. So really big disappointment. We haven't seen any improvement over the last couple quarters. We've given it a little bit of time here. I'm going to probably have to lower my price target for VTRS just based off of what the guidance they're providing. It doesn't seem to be, while it is improving, it's not nearly as substantial as I thought it would have been based off of some of that free cash flow we saw in the first quarter. All right, so when I gave my original stock analysis on April 20th, I had VTRS going anywhere from $16 to $20 in the next 12 months. That indicated a 19 to 49% upside with a downside risk of about 10% or about $12 a share. So technically, VTRS already hit that price target. When I gave this stock analysis on April 20th, it went up to right at $16. It was there for about a week, and then it went down. So it's been on a decline since that time. It's down about 15% from that $16 range, kind of sitting back near where it was on April 20th. So again, the price target was technically right, but if we're looking more of a long-term investment, it still hasn't been able to find stable ground above that $16 range. Now, with that being said, I'm going to adjust my price target for this one. I'm going to keep my price target at $16, but I'm going to lower the high end down to 18. So really the biggest thing for VTRS is the free cash flow. Free cash flow from what we saw in the last 2 quarters is not going to get anywhere close from what analysts were expecting. And with that, I think that we have to lower that price target from $20 to $18. So my price target for VTRS over the next 12 months is $16 to $18. It indicates about an 18 to 32% upside with the downside risk of about 11%, putting the stock at about $12 at the floor level. Now, I don't think this is a super risky stock. The multiples that it's trading on, PE, price to free cash flow, they're not absurd. There's nothing crazy about the multiples we're trading at. I just don't think there's not a lot going on with this stock that's crazy. I think it's kind of settled. I don't think there's going to be a ton of price movement. The other thing I think that's interesting with this one is a lot of shareholders didn't go out and buy VTRS because they were excited about it. They were either dividend investors, income investors that wanted a stable dividend, but primarily I would assume that most of these folks were shareholders of Mylan or Pfizer. And they own those 2 companies for probably a variety of different reasons. And that's why people most likely come to these videos, is because they probably revisited their portfolio and saw that there's this ticker sitting in their portfolio that they never saw before, VTRS. So I think this is something that people have to analyze, make sure it's good for their portfolio, make sure if it changes any of your portfolio mix. I don't see a lot of people going out and looking for VTRS as a good long-term portfolio solution. But it is an interesting thing to report on because, Pfizer, people who own Pfizer is a lot bigger, and people who own Mylan, there were a lot of investors in that as well. And now they have this new ticker, VTRS. Now, not to offend anybody who was an investor in Mylan, knowing that you were investing in the generics business, but my point is you weren't trying to buy this particular company. It is a result of a merger. And, the Pfizer guys, you didn't really ask for this, but it is what it is. Once again, I ask you for your help. Please hit that like button. Also, if you don't mind, leave a comment down below. Let me know what you think of the video thus far and VTRS. Back to your content. All right, so to promote transparency on this channel, I just want to go over what I was buying with VTRS, when I bought, and then just kind of give you exactly what happened and where I'm at right now. So with VTRS, I actually own Pfizer, so I got 3 shares. The stock went down pretty much. Actually, I liked it. I liked what I read. I thought there was some considerable upside in that $20 range, and I bought at $16.90. So I had about 28 shares. Then on the 31st, it had dropped considerably, and I bought around $14. 2 months later, roughly in middle of May, roughly, I sold those shares at $15.70, and I guess I got some dividends, and then I sold the original shares, this and this, for a loss. So this transaction I got a little bit of a profit, not a ton, and then on this transaction, when I sold my shares, it was with this and this, and I actually lost a little money, only made about $100, but it was fun. Really, with VTRS, I do think there is considerable amount of time with this one to trade in and out of, but that's not what I'm doing with my time. More of a long-term buy and sell. But with some of these smaller names, I like to buy and sell as I see that there's some swinging going on. And this is a perfect example of seeing a transaction, seeing a price go down, buying into the dip, selling it, and then just taking the small profit. Please remember to leave a comment down below. Let me know what you think of VTRS and this video overall. Please hit that like button. Also, please consider subscribing to my channel. It helps me out a lot. I create content like this and other things as well in the personal finance world. Thanks so much for watching. Frank Finance,